What is up, guys? Welcome back to another trade recap, but this one is a special one because we're not just going to be talking about ORB and pivots. We're also going to be talking about ICT that you see right here as well, because I've also coded ICT. I've dived into a bunch of different strategies, whether that is ORB, pivots, ICT, breakouts of completely different levels, wick rejections of various levels. Like I've tested, I feel like almost everything. But there's always more to learn, and there's always more to code. But nonetheless, I want to show you all the variety that today's price action had today, especially it being 2 days before Christmas. The volume has actually been really, really nice, and the conditions have actually been very, very good. Without any further ado, let me go ahead and clear the screen, and let's start with pivots. So as you guys know, pivots is a completely methodical and objective strategy. This morning, we had our first candle at 9:30. You can see right here, LE, that stands for long entry. Essentially, we had our first position here at this long trigger. We had our stop loss right here, and our take profit was actually right around here. It was a very instantaneous win. Let me just go into the Discord and show you guys that, yeah, this was pretty much everybody today. This was the start of it. Like I said, fastest TP ever. People were just absolutely smashing. But yeah, it's basically it for pivots, right? It's a completely automated system, to say the least. You're just going to follow exactly what it tells you to do. There's no rocket science behind it. Now, let's dive into ICT. So as you do know, I have completely automated ICT. If we go ahead and pop this on, it's going to show you exactly the position that you should have caught today, which were these shorts right here. We'll get back into the indicator here in a little bit. Let me go ahead and show you my raw analysis from the start, though. We do not start trading until the New York Stock Exchange open, which is 9:30 a.m. Eastern. If you're trading ICT, you really want to be aware of the current day highs and lows. So as you can see right here, here is your current day high, and down here is your current day low. Naturally, if you're trading ICT, you want to see some sort of sweep of liquidity, whether that is the Asia liquidity, London liquidity. I personally don't like session liquidity sweeps. I like to see the current day high or low get taken. That is what I classify as like a minor inducement. And if I pop on the indicator here, you'll see I have this checked off as a minor inducement. What that's going to do is pop on the current day highs and the current day lows. As you can see, it stagnates them out throughout the session, so you can like stay on top of where the current day highs and lows are as they're forming, right? As you can see, here's the new current day low, here's the new current day high being formed by the indicator, as you can see right here. As you can see, the indicator only popped this signal today. Why is that? Well, the reason for that being, I have another filter on here called quick strikes. I've enabled V1, V2. Essentially what that means is we want our entry, which is right here, and our break of structure to be below the actual liquidation. The reason why we want it below the liquidation is because that essentially tells me that we closed as some sort of wick on a higher time frame. So with that being said, if I come into the 5-minute, you can see that the 5-minute has closed as a wick rejection. That tells me that we truly liquidated that level with a sheer amount of force, for one, and two, retraced from it very quickly, telling me that the momentum is going to shoot back downwards, right? So if we come back into the 1 minute, that's why I've classified this as a quick strike. Now you'll notice when I come back into here, I disable quick strikes, I disable minor inducements. You're going to see a bunch of more positions popping up. We don't want those. All right, we only want the cleaner entries. That's why we put on minor inducements. That's why we enable quick strikes. And that's why we have this position here. Nonetheless, let me explain why I really, really like this position. Yes, this goes back to the ICT 2022 model. I personally believe that the market works based off structure and liquidity, not based off of invalidated IFVGs. There possibly was some IFVG confluence on the 32nd. Let me see. There was not. So if you were trading IFVGs and you were on anywhere between a 30-second chart, 1 second chart, not 1 second, 1 minute chart, you wouldn't have been able to catch these really clean shorts, which is why I personally believe in structure and liquidity. Now, what do I mean by that? If we draw out the structure here, right, you can see here is that high right here. They get swept. And then you can see there's that break of structure. And essentially what the indicator is doing is it's just drawing out the Fibonacci level low to high here. And we're entering on that 50% level, which is why you see that zone being drawn in here. And generally what we're looking for is 1 to 3 with the cells here, and a nice little short off like that. So that's what the indicator is looking for. Nonetheless, right, you can see there's that current day high sweep. Now, what made it even more special, and here's the subjective twist, usually the first move at 9:30 a.m. East that you can see here is usually the false move, right? So I saw momentum really kicking in here within the first, minute and a half. This right here is only 9:31. This is literally the first minute of the day. And then what we're seeing is this nice little pennant being created, right? Now, why is this important? This little pennant is essentially showing, all right, here is that strong push up. Here's the consolidation. Now, a lot of continuation traders are seeing this break of the pennant, and they're going to try and enter long right here. They're going to have their shorts below here, and generally this is a pretty good trade, and they'll generally maybe go for 1 to 2 like this. But again, the reason why we're looking for the reversal here is because we have this resting liquidity above, which is the high of the day. So as soon as we take out the high of the day, yes, you can technically be in these buys, but as soon as we start developing that ICT 2022 model that we're seeing here, especially developed by the indicator, this is confirming what I call retail chart pattern deception, right? Because essentially what this is here's the strong push up, consolidation, and now this can be viewed as the manipulation of this chart pattern, right? Does that make sense? So let me show you. Here is the strong push up. There's a manipulation. We're essentially waiting for price to manipulate to then reverse, right? That's the pattern that I'm looking for, and that's what's basically coming to life here, right? So if you don't quite see it, let me just draw it out again. Here is that strong push up at the open. The open generally provides the false move. If you're an ICT trader, there is that consolidation, that pennant continuation, right? There is the false or manipulation of the pennant into the high of the day. ICT indicators showing that liquidation. There's that break structure. Here's your Fibonacci going high to low, tag of the 50% level, and we absolutely distributed from that level there. Now, I'm telling you, it just doesn't get any cleaner than that. But I think the reason why these setups are happening really well at this point in time is we're in this mean reverting like environment at the moment. And that's what's allowing for these 2022 ICT model setups to absolutely flourish in December. Pivots, it's funny because pivots and ORB are having, I wouldn't say the worst month ever, but they're not doing as well because those are breakout strategies, right? Whereas ICT is a mean reverting strategy. You're trying to pretty much catch the reversal. Let me get a sip of water. I'm talking at the speed of light here. But anyways, that is really the short understanding of what I saw with ICT. Another thing you can recognize is the market maker model by Steve Morrow. If you are like me and you've been looking at charts since like 2014, you'd understand what I'm talking about. But anyways, this is that first mark up, second mark, third mark. Generally, we have 3 strikes to the high, right? We can expect a reversal. That is something pretty much called the market maker model, where the market jumps up, consolidates, first strike, jumps up, second strike, third strike, right? And then generally after that fourth one here, we can see a reverse, which is essentially what's happening. 1, 2, 3. This one decided to go after here. I mean, it only makes sense statistically, right? Because the more something keeps falling down, at some point it has to reverse back up, right? So that's what's going on there. Now, again, I don't like to target the opposite liquidity area because we're not really guaranteed anything there. You can see that we did take out the New York Stock Exchange open lows and then decided to continue to move back up higher. I don't really have a strategy developed for that. Maybe I can make one. But as you can see, I just wanted to show off the indicator here to show you that, it's doing exactly what it's supposed to do, which is identify the 2022 ICT model. And again, I think you're too likely to miss setups with IFEGs because the market does not move from inefficiency to inefficiency like that. It moves based off structure, in my opinion. In fact, it doesn't really move off of technical analysis. If you guys know me, you guys know that I view technical analysis and price action as a way to generate signals, and then you need to validate those signals through some other means of data, right? Whether that's fundamental data, order book data. Again, technical analysis is just a way to manage risk and generate signals. And I'm not talking about Forex signals. But anyways, that's enough for ICT. Let's get into ORB today. Here was ORB V1, right? ORB V1 wanted to come here. So if you know how to trade ORB, you know that I like to look at the 5-minute chart waiting for that signal. Today, unfortunately, we broke even. Let me explain why. So first of all, here's the first initial break. Let me actually get rid of this. Let me get the indicator up because it's a little bit cleaner. Here's the first initial break. I actually just traded pivots on this account today, and that's why you saw me hit that win. So you saw the pivot. We entered here, exited here. Beautiful day for pivots. Unfortunately, break even for ORB. Here's why. Here's a nice little piece of liquidity. There is that London liquidity here. What I was saying in the group, and I do keep the group updated within the pivots bundle. I was basically saying that if we were to close as right here, if we were to close as a larger wick than the body, that would be classified as a rejection. Yes, I still would have traded it. I would have just lowered the risk, right? And that's exactly what I did, is I lowered the risk to the smallest amount that I possibly could have, because I itched to trade and I know everybody else does. So I decided to throw on a little contract right here. The body was larger than the actual wick itself, but again, there was still quite a massive wick here and a massive rejection on this level. Now, here's what made me decide to go break even. Here is the high of the day, right? And the high of the day, as you can see, clearly had a wick rejection on the 5-minute candle right here, right? We're just talking about ICT and wick rejections, right? Well, I apply very similar concepts to managing my risk for the opening range breakout, aka ORB. Here is that wick rejection, right? And as soon as we had that wick rejection, I immediately knew, I was like, all right, well, the market could reverse, right? And yes, I have built strategies and coded strategies where we have a wick rejection at like a key level like this. And I have tried entering here, stop loss here, take profit here. I've tried that. I'm telling you right now, it works to some degree. You need more confluence like footprints or volume and other things like that to really confirm those reversals. But the strategy itself, just basing a candle wick on a key level like this, doesn't really work over the course of 5 years. It does work some years. You're going to have some newbie traders come in. Oh, it's worked for me for the past 6 months. I'm telling you, you're going to get fucking smacked in the face on like year 2 or year 3. You could, I guess, technically trade it as a way to diversify your portfolio between a bunch of different strategies. But again, I code everything and I can see what works or what has worked in history from an objective standpoint. God, my brain moves so quick sometimes. Regardless, as soon as we closed as this candle wick, I moved my stops that were from here to here, and we hit break even, unfortunately. But again, ORB is all about managing risk, right? If you can manage it correctly, then you will do fine. That's really all I saw today. I think V3 is the only one you can follow blindly, right? The reason why you can follow V3 blind, and it did hit TP today, is because that one I'm purely basing off of data. If we actually go over to V3 here on ORB, let this load up. Right now, what this is showing, this one's showing V4 at the moment. All right, so there's V4. And it does have drawdown periods, as you can see, right? The whole idea is to offset them. Here's V3. V3 is such a linear, upward sloping equity curve that like you can simply just blindly trade it. Did have a little bit of stagnation here from June to August. You can see down here. Here's the drawdown from June to July, or May 28th to July 7th. So quite a hefty drawdown period. But then right when July 7th hit, we've just been upward sloping since. And if you guys go into the profit channel, you'll see that someone had a $30,000 withdrawal, or 2 withdrawals of $15,000 with V3. So I mean, I know what I've developed is good when people are hitting withdrawals like that. But nonetheless, that's really today's price action. I'm going to be putting up more breakdowns like this completely for free. I don't really need to sell education, but I do not mind selling my actual developments because it does take time to code these things. These things are not easy to code. As you can see, I do have an IFEG indicator as well that, when price comes into the higher time frame PD array or higher time frame IFEG or FEG, you can then switch on a setting to then get a lower time frame entry. And there's so many different things that I've added in as well. I'm waiting to find a variation that's so profitable, I will then release it. Right now, it's hard to find those variations. There's a lot of things that work for like 6 to 8 months. And no offense to anybody that trades IFEGs. And I get it. You're like, oh, you're not including any subjective or discretion to your trading. I don't add discretion or subjectivity to my trading for a reason. I like to trade like a robot, and I like to trade with rules. You can't apply rules to a subjective narrative, in my opinion, or it's not effective long term. I'm trying to find something so cool and so consistent with IFEGs, it's going to blow every other IFEG trader out the water. When I find it, when I add that refinement in there, I'll release that, and I'll release the set file for it as well for people to use within the ICT suite. Without any further ado, I hope everybody enjoys the holidays, has a great Christmas, great end to the new year, or a great end to this year, and a good start to the new year. And yeah, I'll catch you guys in the next breakdown.